Welcome back, everyone, to another market recap. Today is Wednesday, November 20th, 2024, and this channel is the ultimate place to help you get better at trading. I have short form videos on essentially everything you could ever want to know about, as well as I do daily market recaps. So, if you like this type of content, definitely consider subscribing, leaving a like, checking out my completely free Discord, as well following me on my Twitter, where I post all kinds of things like this, where I show how today was the perfect example of understanding the higher time frame model leads to you being able to take incredibly strong lower time frame trades. So check this out. I'll show you on the charts right here. So the first thing I noted out in the morning, well, one of the first things I noted out in the morning is we actually had an SMT forming with this high over here. When this happened, I also had marked out on the the stat map. So if you don't know what this is, it basically plots out the average statistical expected manipulation and distribution for any given candle. In this case, it's the daily candle. So expected manipulation was here, expected distribution was here. And this is actually really, really insane because you can see how this went almost exactly to that statistical manipulation level and then straight to that distribution level. And then you'll also note that we pushed into this 1 hour order block, which overlapped with that statistical manipulation level. So made this extremely, extremely high confluence with this SMT that we are possibly at the top of this market maker sell model. So here's this hourly order block. So then you can see how that overlaps with that manipulation level. And then if I mark out this, you can see how this is the buy side of the curve and this is the sell side of the curve. So peaking at this top here, this hourly order block with the SMT with which is just a break-in correlation where the S&P forms a higher high and the NASDAQ forms a lower high. So then, going into the lower time frame, we can actually pull up our session highs and lows now. And going into the day, at this point, I noticed that London swept Asia's highs. And I also noted that we swept Asia's lows, but first we swept Asia's highs. And when that happens, a light bulb needs to go off in your head that if London sweeps Asia's highs, that it could be a possible London reversal day. Because what's a London reversal day? A London reversal day is when we push into a key level during London. So check this out. Let's see where I have it here. Hang on. Here it is. So here is your template for a bearish London reversal day. You have Asia forms a range. London pushes up into some kind of higher time frame key level. This is how you know it's a London reversal day. And then New York continues down. So there's only 3 main daily profiles you need to know. Either London pushes into a key level, New York pushes into a key level. So London pushing into a key level is London reversal. New York pushing into a key level is New York reversal. And then the only other one there is that you really need to know is basic AMD. So just a tight range forms, and then it's essentially the same as the other two, but essentially it's more like it's more of an obvious accumulation range and then an obvious manipulation, and then it's not trending up and then trending down. But I'll have to get into that in another video. So anyway, you had Asia go sideways. London manipulates into this hourly order block. We got SMT with this high over here, and then we come down, and you'll note if you measure out the standard deviations of this move here, the 2 to 2.5 lines up with New York PM's lows, And as well, if I turn on the new week opening gap indicator, is that it or is it this one? You'll note that we ended up coming all the way down to that daily distribution level, which overlaps with that new week opening gap. And so you can see if I measure out from the bottom of Asia's lows to that top of London's highs, that's the manipulation move up. You can see that 4 to 4.5 is exactly where we went, and it's overlapped with that new week opening gap. So if that doesn't blow your mind, then I don't know what does. But clearly, there's something up here, right? This is not moving randomly. We went exactly to that 4 to 4.5. And as well here, you can see this -1 overlaps with New York PM's lows. So now we go even into the lower time frame to find a trade. You can see the market is perfectly reacting off of these time levels. We get a push in 8:30, move lower. A push in the midnight, move lower, confirming that this is a market maker sell model going after New York PM's lows and going to this new week opening gap as well. We had equal lows all through here. So, let's turn on our new day opening gaps, and you can see that at first in the morning, I thought that we were going to sweep Asia's lows and then run up to London's highs, because this seemed like your classic 2022 model. You have a fair value gap that formed here. So I thought, okay, sweep of Asia's lows, push into this fair value gap. I thought we were going to go up towards London. But then I remembered, wait, what kind of daily profile is this, right? This is a bearish London reversal day. Why do we know this? Because we clearly pushed into this hourly order block. This isn't like, oh, maybe we pushed into it. No, this is an obvious objective level that we pushed into. And this overlaps perfectly with the daily manipulation. So this isn't random. This also had an SMT. So this takes precedent. Even though we swept Asia's lows and this is a liquidity pool, this hourly order block with this SMT takes precedent. So we then continued lower and lower from there within this larger market maker sell model. All right, so but you can see how price perfectly respected this new day opening gap and then continued higher. And this would have been a good 2022 model up to this high, but unfortunately, since we were in a higher time frame market maker sell model, we were gonna continue lower here. So then pushing off 8:30 level, you can see how if you enter at any of these time levels, knowing this is a market maker sell model, you can get like insane risk reward trades, like literally just entering off a time level. And this is something I was pointing out today. I'm like, wow, like this is crazy. Like, I don't know why no more people don't talk about this, right? So anyway, then we pushed lower. Eventually, the first trade that my friend FA and I noted that you could have probably taken, and yes, we had equal highs here and here, but once again, we're within this higher time frame sell model, so we're trying to stay in line with our bias here. And as well, we had a New York reversal day. So the first trade we noted you could have taken was we pushed into this fair value gap, and then we inversed this. Now, I didn't take this because I didn't think this was amazing, but you could probably assume we were at least going to come back to this new week opening gap. And so you could have taken this. If I were to do this again, I still don't know if I would have taken this, because it's a 2-to-1 risk reward trade, but it's a good trade, but I just didn't feel like taking it. I wanted something higher probability. But you can see that was a good entry point for the rest of the day. You could have targeted New York's PM's lows. You could have targeted down here. Knowing this was a higher time frame market maker sell model was the key, because this entry for the rest of the day would have been, amazing. And then you had a push back up into this new week opening gap, and this was a key resistance level. This overlaps with a fair value gap here. And then this is where I took my trade. So we had a pushback into the 930 open here. And at this point, I was basically ready for my trade, right? So I noted that we had New York PM's lows, which we were clearly drawing to. The standard deviations of this move, I think it might have been this move actually. From this bottom to this top, lined up with New York's PM's lows. So I knew we were drawing to New York PM's lows. I knew pretty confidently we were. So we had this fair value gap here on the 1 minute overlapping with this new week opening gap. We were delivering from this area. Then on the lower time frame, I was looking for this 30-second to close, but we closed way too low, and I did not want to enter this. So I was like, okay, that actually kind of sucks. But I noted that we had the 930 open right here, and I was like, well, if we get a push back up into the 930 open within this, because this is a BPR, right? A bullish for value gap overlapping with a bearish for value gap. So I was like, well, if we get a push back into this 930 open, then I think this could be a good trade. And so we did get a push back into it. So my stop loss was going to be if we closed back above this old bullish for value gap. And I put my sell order right here. This was on my eval account. So this was my first trade on my eval account. Once again, my stop loss is up here, but in reality, my stop loss is based on a close above this value gap. And then it's targeting a 3-to-1 risk reward trade, and boom, got to the 3-to-1 risk reward trade. And then as well, you can see this 4 to 4.5 lines up with this new day opening gap, and there were equal lows all through here. And so I would have liked to leave a runner to these equal lows, and which are right here. They were right here. I would have liked to leave a runner here for a 8-to-1 risk reward trade, but I didn't realize that I could take a partial. I couldn't take a partial on my new Apex eval, so this didn't really make a lot of sense for me to be there was no way for me to take half off here because I didn't execute multiple sell orders. I only executed one, so I had to take all off here. And it was unfortunate because I would have gotten a lot more on this trade had I had held a runner, but that's okay. I'm very, very happy with a 3-to-1. I'm up now 600 on this count. Where is it? I'm up now 600 on this account. So on my way to hopefully getting that payout. And then anyway, let's take a look at some other trades because you're probably sick of hearing my thoughts. We have Joshua who says this is exactly what I was saying. We went exactly to that manipulation level and then exactly to our distribution level perfectly, right? This is the best example of stat map that I've ever seen work. That we went right to that daily manipulation and right to that daily distribution. Exactly. Today was a great day to trade. We're going to talk about some trades from Dodgy. Here we have, he said this is a live account play. Boom. Oh no, I just clicked on the wrong thing. We had this close above this old fair value gap here, and we had these highs that were unprotected and these highs that were unprotected. He knew that if we closed above, it was just going to be a giant stop run towards this buy side. And so he enters here, and we get that move up higher. This was probably like a 2-to-1. This was at 11:30, and yeah, you can see that right here. Once we close above this fair value gap on the 1 minute. Once we close above this was the entry, and then you get a giant run up towards this buy side here. So that was a nice 2-to-1 risk reward trade from Dodgy. Good job. That happened later on in the day, but I'm making this a little bit later, so I'm able to cover that one. Then as well, we had this from Dodgy. This was earlier in the morning. Only trade today. Never gave me my model on the way down, sadly. so you couldn't really do much besides watch the screen. I personally would not have taken a long, knowing that this was a giant market maker sell model. I think you just got to take trades in line with the bias, but Dodgy did take this long here, and he took it at 10:32, which I guess is fair. Let's see, what time frame was this on? I think it might have been a 3 minute, 5 minute. Let's see. Might have been the 2 minute. Anyway, it was something like this. Clearly, you can see there's some kind of inverse value gap in here. And we were delivering from the new week opening gap, so it was decent because of that. And you could have targeted this new day opening gap. But once again, and as well remembered, this was that 4 to 4.5 standard deviation. So it was fair to expect a retracement here, especially going back to this other new day opening gap. But yeah, we were in a giant market maker sell model. But yeah, this was fair because we had hit that max extension, and it made sense in this context. So anyway, you can see that this trade would have worked out beautifully. Stop loss is a close back below this old bearish fair value gap, right? And then, yeah, this is an external gap, which I don't love, but still, this would have been a nice trade. I mean, if Dodgy likes it, then I like it. So, good job, Dodgy. Then we have this trade on the S&P 500. This is a good example of a breaker block trade. Just so you guys get familiar with breaker blocks a little bit better, we have a low, a high, a lower low, which takes out this swing low over here, as well as this internal low, and then a higher high. So when you get this formation, a low, a high, a lower low, a higher high, a retracement to this up close candle is a bullish breaker. This overlapped with this fair value gap here. You can see that with the gap between the low and the high here. So that overlaps with this breaker. You enter here, stop loss below the breaker, targeting a nice 2R. This is on the S&P, so I'm not going to pull up the S&P, but just wanted to show that. We have this trade from Camel Trades, which was exactly the same as Dodgy's, so I'm not going to go into detail, but he does note that there was an SMT at those lows. And then we have another unicorn trade from this guy, showing how he used standard deviations to project out the move, right? Now, I'm noting a lot of people are using the bodies, but I noticed that the actual entire manipulation move works pretty good too. You guys are going to have to let me know what you guys think. But, yeah, this was a high, a low, a higher high, which swept both of these highs into the daily manipulation level, and then a lower low. So this was an excellent breaker block. So this entire down close candle is the breaker, drag out over, we get a push back into that breaker, and then we get a move lower towards that 4 to 4.5 max extension. So very, very nice trade from Unicorn Trader. And we have a couple trades from FA. So he says, trading with Jake is OP. He also was trading with me in my live stream, and that was that first trade that I said I didn't take, I'm pretty sure. And then this was that second trade that I did take, or at least one of these was the trade that I took. He got both of the entries. And so very, very awesome that FA caught those. But we were right about our entire bias today because we knew the higher time frame model. Let me pull that up. We knew the higher time frame model that we were trading. We knew that we were in a giant market maker sell model. And because we knew that, we were able to take a smaller, lower time frame trade within that higher time frame sell model. So let's pull up that trade from me again. Once again, you can see that because we knew that we were in this sell model, pushed into that hourly order block with SMT at that manipulation level perfectly, because we knew it was a London reversal day, we knew it was a sell model, and we were able to catch amazing trades like this. And then lastly, we have a trade from Hydra. Here he shows. This is exactly the same thing that Dodgy took, but he also notes that this is a breaker block as well. So let's pull up that again on the chart. See if we can find it. We might need to pull it up again. So 11:30 to 12. 11:30 to 12. So yeah, this wait, let's look at that again. This is on the 3-minute. So you can see that these two candle bodies can be put together as like essentially one bearish for value gap, and we got a close above here as well. We got a close above this breaker block, which is a low, a high, a lower low, a higher high. So on the close above this breaker, and with this inversion and this SMT, he basically confirms that we're going to go higher. So on the retest of this breaker block, which is the low, high, lower low, higher high, on that retest, he enters, and he has all these confluences to go higher, and then he takes profit at that high. So you can see here that you can see that trade. You have a low, a high, a lower low, a higher high. That series of up close candles is the breaker. These two candles put together is the inversion. So this and this are one bearish for value gap. Put together can also be noted as one bearish for value gap. We close above that with this candle as well. We close above the breaker with this candle. So here's the IFEG. Here's the breaker block. And then on that retest of that breaker, that's where he entered, and he was able to target this high for a nice solid, probably like 2.5 to 1 or 2 to 1. I don't know the exact risk reward on this, but yeah, stop loss below the breaker, or I'd put it below the inversion, but he put it below the breaker. And yeah, very, very good trade from Hydra. So with that, hopefully you enjoyed this video, and I will see you guys in the next one. Bye.